Voice of FinTech.
Welcome to Voice of FinTech, a podcast mapping out the Swiss and global fintech scene, connecting fintech enthusiasts with startups, incubators, accelerators, business angels and VCs, and incumbents interested in partnerships. Voice of FinTech will help you navigate the fintech ecosystem. Here you can listen to the startup founder stories, what investors and incumbents are looking for when dealing with startups, and find out more about resources provided by incubators and accelerators. My name is Rudy Falad and I'll be hosting this podcast. Hello and welcome to Voice of FinTech. Today we're talking to Martins, who is the co-founder and the CEO of Mintos, which is a fantastic platform to invest. If you have excess cash or if you would like to borrow, we will find out about the key clients, the key value add of the platform. In full disclosure, I've been using it. I like it, but we'll find out more from Martins. How did he come up with the idea? How did he build it? What's cooking, because I also know they are raising money. So I'm very curious to hear from fellow INSEAD alumni to continue in the entrepreneurial tradition of INSEAD, right? So Martins, how are you today?
Thanks. It's my pleasure to be here. It's been a great day and obviously exciting week with all the crowdfunding campaign which we launched this week.
Right. And where are you based in the world these days?
So I do come from Riga in Latvia, and that's where I actually have spent most of my life. And that's also where we decided to, when we were thinking where to launch Mintos, also decided to launch it here from Riga, from Latvia.
All right. Excellent. So can you tell us a bit more about yourself? How did you get to the motivation to start your own business?
Sure, happy to. So my background is really in investment banking. Did that for a good 6 years. Then went for the MBA at INSEAD with a whole idea to go do actually international career, at least for some bit, and then return back to Latvia most likely and do entrepreneurship. So I had this entrepreneurial bug, I would say, since very early days. Mostly, I would say, because of my parents, which were kind of typical post-Soviet Union product and engaged in many different activities, which you could call entrepreneurship. And then it's basically after I just realized that why wait for 5 years? Why not do it straight away? And that's how the whole journey of Mintos started.
Brilliant. And as I said, you're a co-founder. This is one of the topics I like to dig into because I'm curious about how did you pick your co-founders, or was it the other way around? Did they find you and pick you?
It was me picking, but obviously like by picking, it's maybe one-way street. So obviously it goes like mutually getting together, understanding that you want to do something together. In our case, so I basically relied on my network here in my home country. So the first guys which we got on the board were actually angel investors, which I would call like founding angel investors. That's 4 guys, which I met at undergrad. So they are my basic classmates from undergrad. I knew them very well, and I knew that they are very experienced in the sector, in basically alternative lending. And then the other guy, which is operational, the other Martins, so he's actually a guy as well from the same undergrad, but I met him in my first job at Ernst & Young. And so when we launched, it was me and the 4 angel investors / co-founders, and then the Martins joined half a year or so later. Was rather diligent process in going through who could be another operational co-founder, and then just put together all the pluses and minuses and what I would expect from the co-founder, and then Martins was a very good fit.
Okay, great. I mean, that's what I was hoping to hear. Basically, you were following the skill sets, right? And the whether they're complementary to you and useful for the business rather than familiarity. Some people say, well, my co-founders, my best beer drinking buddies, right?
Yeah, well, obviously all the situations are different, but I think in business, at least my view is more that you have to be on a good terms, but maybe not like the closest friends. So that helps. So it was definitely a more diligent process in that aspect from our side, or from my side.
All right, understood. So what is Mintos? How does that work?
Yes, so Mintos is a marketplace for investing in loans. So we do bring a new alternative investment type to retail investors, and that is loans to consumers and small businesses. So basically, retail investors do come to Mintos to invest in loans which have been issued to consumers and small businesses all around the world. So today we have around 340,000 retail investors who have in total funded already 5.7 billion euros of loans, which have been originated in 30 plus different countries. So we offer a very wide spectrum of different loans, and that's a key. Apart from the fact that actually we open the asset class as such to the retail investors, the key what we actually offer is this unmatched loan supply, and basically each investor can build their own portfolio according to their preferences.
And well, you already said you had entrepreneurial bug, and so there were preconditions here for coming up with the idea. But how did you come up with the idea, and when?
I think idea obviously is important, but also our idea has evolved from what was initial idea. Our initial idea was to build what you would call maybe a typical peer-to-peer lending platform. So we were actually issuing loans ourselves and then putting them on the platform and selling or funding through the retail investors, which very soon after we launched evolved in the business model which we have today when we don't issue any loans ourselves. So instead of loan supply is brought to the marketplace by different lending companies all across the globe, and that just gives much more supply for the retail investors. When it comes to the idea, I think the idea is really basically there are trigger events, but the idea is more of a combination what has happened with you in your life up to that point. So it wasn't the case that I was walking down the street and the lightning struck, and then I realized, okay, I have to do Mintos. So it was a bit more diligent process again. So I was just going through what I know, and that was finance, and what I do like, and that has been tech. Even though I don't code, so I've been always amazed by the all the latest gadgets, what the technology can do, with all the computers and all this. Just combining that finance and tech, so you end up with FinTech. And at that time, which is early 2014, when I finished my MBA, the peer-to-peer lending was something which was picking up, and that caught my interest. And then I just decided, well, that's something which we might want to pursue, and basically started to work on Mintos.
All right. I mean, you mentioned that your investors are retail investors, but maybe tell us a little bit how that works, because obviously it's an alternative asset class, right? This is not like a deposit in the bank. And then I would be also interested to hear where they are from, because you run it out of Latvia, but I know you're quite international. And one more thing is, when you look at the platform and you invest, you also see where that money goes, right? And like up to even like 10 euros piece. So what kind of loans do you finance? So first, the investors, where they are from, what kind, how does that work versus regulation? And then lastly, what kind of loans are being financed by these investors?
So on the retail investor side, so those are kind of typical retail investors. So we do, as you mentioned, investors can start investing from as low as 10 euro per loan. So because they do invest in fractions of loans, so each loan can have hundreds, if not thousands, of investors who are funding the loan. Then if we're gonna have investors who are investing just a few hundred euros, we're gonna have investors who are investing millions of euros through us. So obviously the range is quite wide, but on average, I would say that investor is holding around like 4,000 euros of outstanding investments at this moment. When it comes to the geographies, exactly so. So we are based out of Riga, Latvia, where we have the main office. We do have an office also in Berlin, and we do have an office in Vilnius in Lithuania. So we are based out of here, but most of the businesses are really outside of the Baltics or of the region, actually. So most of the investors do come from Western Europe. We have a strong presence in Germany, in Spain, in the same Netherlands, also in Czech Republic, in Austria, and so forth. And then on the loan supply side, it's truly global. So we have loans which are originated in Mexico, or loans which are originated in Botswana, or loans from Southeast Asia, from Indonesia, for instance, Central Asia, and then everything in between. So it's 33 countries as of today. So it's very global offering in that respect.
And what kind of loans are these? I mean, are they people who buying a washing machine or a TV or a car or what? Are they, consumer loans, or what is the money used for?
It's again a very wide spectrum. So we do facilitate 8 different loan types. So anything from short-term payday type of products to installment-based loans. Then it's going to be secured loans such as car loans or bridge type of mortgage loans. Then it's going to be small business loans, invoice financing, so all sorts of different loans. So to date, investors in total have funded 28 million different loans. So it's been a very wide, a very wide spectrum of different loans which they do fund. So it's going to depend really. So we're going to have, a low, small few tens of euros payroll loan in the same Botswana, given to government employees, and then we're going to have small business loan in Poland for like a couple of tens of thousands of euros or maybe more. So it's a very wide spectrum.
All right. Okay, I see. So you mentioned before that when you were coming out of INSEAD, you saw the growth in P2P platforms, right? And you've been around for a few years now, so obviously I would expect that you have done well even without looking at your financials, right? So how would you say that you are different from your competitors, other P2P platforms?
I think first we actually would not position ourselves as a peer-to-peer platform because we don't do lending ourselves, so we don't really see the borrowers, we don't originate the loans. The key to our success, and it's been good first steps perhaps in the right direction. So today we hold, according to the latest market data, we do hold almost half of the market share when it comes to funded loans in Europe. I think the key to that has been really the business model because on one hand, we bring the loan supply from very many different countries and they are originated by different lending companies. So that has allowed us to scale the loan supply side significantly in a very fast manner. And then on the other side, for the retail investors, we do bring a very much unmatched loan supply, so they can pick and choose all sorts of different loans. And then you have basically indirect network effects on both sides. So the more investors we bring, the more loan supply we can actually bring to the market. The more loan supply we bring to the market, the more retail investors we see joining us. So obviously, it's been as for any two-sided marketplace, the challenge is to grow it in a balanced way. But really the key, I would say, has been the business model, but of course also execution. So execution is a big part of any success as well.
Obviously, when it comes to 2020, there's no way to avoid the pandemic. Let's look at it from the business perspective. How did that affect your business? There are some platforms who say that they've actually seen a great growth or they've seen a slowdown because of this. I mean, the reasons could be that people are a little bit less certain about their fortunes, right? So if they are retail investors, they don't want to invest in something illiquid. But in your case, it's illiquid, but it also brings income, right? Because you're getting income right away from those loans. So how did that affect your business in terms of the volumes that you see on the platform or marketplace? Sorry, I did listen, so I'll correct myself. I won't say P2P platform anymore.
I think that it's as a marketplace, so we had the effects on both sides. So, and the first and foremost effect was, of course, on the investor demand side. So already in late February and early March, and we have to take into account that most of our investor base do come from Western Europe. So we saw those early signs of lack of confidence about the future in the minds of retail investors. And then came early March, and they definitely scaled back their investments. So that's what we saw on the demand side. Then it wasn't affected actually immediately, so it took some time. But we also we saw on the other side of the market there was increase in non-performing loans, which some of them also went into the recoveries. That further affected the confidence of investors in the basically March, April, May. And then I would say that starting already with September, late September, now October and mid-November, so the confidence is coming back, and we definitely see the signs of the growth and us getting back on the same growth path which we were on before when we were doubling our business every year for 4 years. So obviously 2020 has been challenging in that respect. So we expected quite a bit different year when we started 2020. So with all the investments and efforts so that we actually can double or maybe triple the business this year. However, we had to refocus, and we refocused instead of the growth, we refocused on the current business. Still, there's going to be some growth. So in this year, we expect to grow some 10-15%, but obviously that's much slower than if it were not for the pandemic. But definitely was a good experience to go through.
Right. Good to hear. Good to hear. So I want to turn into the growth and maybe look back a little bit. You've been growing rapidly since the beginning, right? So how many people do you have now in your company, and how do you adapt your management style? Maybe a good example is, when did you stop knowing everybody's first name?
So today we are a bit more than 150 people. It's been, I would say that, so we've been around for 5 years since we launched in 2015, January. 2015 and 16 was more about trying to understand if what we do actually do make sense, trying to find what you would call perhaps a product market fit. And then really in 17, but more so in 2018 and 19, we really scaled up the business. So for instance, in 2019, we actually, when it comes to the team, we expanded the team from 60 people to 180 people. So it was basically we hired or tripled the team in a year's time. About knowing the name, it's a good question. Definitely, at some moment you do that. I would say that actually I'm pretty good with the names and, well, in general, kind of remembering the things. So I would say even up to maybe some 100 people for sure I knew all the names. But even today, I think most of the names I definitely know. One of the things which we do, or which I do, we do have the newcomers lunch with newcomers lunch with the CEO. So all the people who join, so I go out with them for the lunch. That's a group session, but still we spend a good hour and a half or two and get to know each other, and that definitely helps when it comes to knowing the names and putting the name behind in many cases. So we interacted definitely these days. We interact through chat, so at least you can put the face behind and the name as well.
Definitely. Wow. So also reflecting on your journey so far, I mean, did you have moments where you thought this is not going to work out, so maybe I should give up and do something else, or was it always a smooth sailing for you?
Neither. So it's I never doubted. I think I never doubted, and as a team or company, I think we never kind of doubted that what we do makes sense, and it's gonna go up and to the right. But obviously, of course, it's all hasn't been the smooth sailing either. So, well, the 2020 is one example, but overall, obviously, there are ups and downs throughout the years, and at some moments you might, for a very short term, maybe doubt some of the decisions or directions where you are heading. But overall, I would say it's been always very positive about the future, and I think you cannot do otherwise. So then, if you start doubting, then maybe it's time to do something else.
Brilliant. I mean, that's what I wanted to hear, because the objective of this podcast is also to encourage people who are thinking about doing something like you to actually try it, right? Which leads me to the inevitable question: is the money? I know you have been raising funds through crowdfunding campaign. You've raised nearly 6 million euros. You've been around for a while, so why did you choose this route to raise funds rather than maybe in some markets people would go to VCs and do it this way, or would have incumbents investing in them? Why crowdfunding, and why is this the best way for you today?
As a background, so we actually have been revenue generating from day one, and most of our growth we actually have been able to support by our revenue. So before the crowdfunding, we have had raised only 7 million euros, all from angel investors, the same co-founding angel investors. So we actually have had very little outside capital raised to date, especially given to the position where we have come to. When it comes to the fundraising, so the crowdfunding is actually, when it comes to the current fundraising, so the crowdfunding is only part of our fundraising strategy. So it's actually going to involve both. It's crowdfunding and venture capital. So crowdfunding was more as an opportunity which we wanted to give to the community. So we do have a strong community, and we wanted to give them opportunity to join us on our journey. And many of investors actually throughout the years have themselves asked like when and how they can participate and buy equity of Mintos. So this is what we did. So together, we used the Crowdcube platform, and it was amazing. So the support and interest which we got from investors was overwhelming. So as you say, we raised more than 6 million. It's still open, going to be open for a few days. We have 6,000 investors who chipped in. And this is actually going to be the largest crowdfunding raise in Europe outside of the UK in history. So definitely very good campaign at the end of the day. But that's only part of the fundraising. So we are now gearing up for the venture capital round, which we're going to launch early next year in Q1 perhaps. And then it's just going to be, we have to look at both of them together. So it's both crowdfunding and venture capital.
I see. All right. Understood. Makes sense. So maybe a person with a finance background would ask you, what are you going to spend this money on, right? In other words, what are the next steps for you this year and beyond having all this money?
It's definitely to basically take the best of the opportunity which we have ahead of us, and it's basically to invest today so that we can build a better company in the future. So it's if we put it like very simple, then it's two things. It's really scaling up our current offerings. So it's basically more customer acquisition, reaching more customers when it comes to retail investor side, and we'll also getting more loan supply on the marketplace. So that's one part, and the other part is at this stage. So for us, it's also the scale where we are at. It makes sense to branch out in a new product. So we will build out new products so that we can provide additional value to our customer base.
All right, great stuff. Now, before we wrap up, I'd like to ask you also, if you do have time, because I guess you're quite busy, what is your favorite business book that you come across recently?
I do read quite a bit, so I would say I read more or less like most of the days. I do read business books, but of course at some moment they do get repetitive. But I think some of the books which I tend to actually refer, or if somebody asks me what is the best kind of when it comes to business books. So I mean the paradox is the more you read, the harder it is to give you a good answer. Like what is the best book?
Right.
So the question you have to ask is like in what specific field, or like what exactly you're looking for. So if I have to generalize, I would perhaps pick The Hard Thing About Hard Things. It's still one of the books which I think that's one of the few big. I have read only a few books, and The Hard Thing About Hard Things is definitely one of those. So that's one which I would definitely pick. And the other one,
what is it about?
It's basically by Ben Horowitz, one of the guys behind Anderson and Horowitz venture capital firm. And their book is about really talking about the stuff which nobody talks about in basically management. And I definitely have referred to that. So like actually now in 2020, so we had to do the reductions in the workforce And I referred to the same hard things about hard things, how to do it properly. And actually, I think we managed to do the best you can do given the circumstances. So the hard things about hard things for sure. And then the other one also will be a classic, and that's even more classic, is high output management. That is another one which I think is a very good book and very kind of on a general level can definitely suggest. But there are many. I mean, there are many. The more you read, the more the harder it is to give you a good answer.
Of course. Well, wonderful. Thank you very much. So my last question is for Martins. Where interested parties can reach you? What is the best way to find out? Who would you like to hear from most? I mean, you said the fundraising is almost finished, but the marketplace obviously keeps on running and fire up on all cylinders. So what's the best way to get in touch, and what kind of people would you like to hear from most?
If it comes to Mintos, then obviously the best is just to head to Mintos and then take it from there. I think it is a good addition to any portfolio to add as an alternative investment, to add loans as an additional investment to the total portfolio. When it comes to me personally, I would say that the LinkedIn perhaps is the best medium to reach out to me. So at this stage, obviously, most of the conversations where I spend most of the time is about the venture capital, and now it was about crowdfunding, but the campaign is closing soon, so now we're going to switch back to the venture capital.
All right. Well, thank you very much, Martins, and good luck to Mintos.
Thank you, Rudin.
Thank you for listening to Voice of FinTech podcast. If you haven't already, check out also voiceoffintech.com, where you will find all the episodes and additional resources related to the podcast. You can also subscribe to Voice of FinTech on Apple Podcasts, Spotify, Google, or any other podcast app that you like. If you have any suggestions on the topics or guests, or how to make this podcast better for you, please email us at info@voiceoffintech.com. Happy to hear from you. Thank you.